The stock market sell-off has hit a few sectors, but not that many as hard as financials. So what are they telling us about the market overall? It's our chart of the day.
So the chart we're looking at here is the S&P 500's performance, or bank sector's performance, relative to the S&P 500. So essentially, banks outperformed the market notably from the Trump election, and they have now given up all of that outperformance. And I think the bank sector has continued to be a leading indicator both on the upside and the downside for a sense of where the market is at overall. I mean, today we have the market down about 1.5%. The bank stocks down a little bit less than that, but they were clearly leaders on the downside. And I think now we have the bank sectors losing their outperformance. Pretty soon we're going to be talking about consumer discretionary stocks losing their outperformance. And then all of a sudden we're talking about a market that is going to lose all of the Trump outperformance, if you will, right?
Yep.
I mean, we're up about 15% from when Trump was elected. Divide it by 2, you've got 7.5% a year. Pretty good. Most people would take that. That is about average for the S&P over the course of history. The question into 2019 is, are we also going to see that roll over? I mean, we are on track right now to have 2018 be one of the few years we've seen over the last 20 where on a Jan 1 to December 31st basis, the S&P is going to be in the red. Not just flat, not up 1%, in the red by 5, 6, 7% at the current pace. And I think that changes a lot of things. You know, not often does the market go down twice in a row. We're going to have a lot of stats thrown out here in the last couple of weeks. But you look at banks, and they're basically telling you that this rally that we saw after Trump was elected is over, right? So why is the market going to be up a couple percent a year? Yeah, corporate profits are pretty good. The economy is pretty good. But that Trump-specific boost that we saw is coming out of this market.
And bank stocks, can do better in a rate-rising environment.
Bank stocks can do a lot of things. We've heard literally every excuse under the sun for why bank stocks should be up. The fact of the matter is they're down a lot, and so the market is telling you it doesn't matter what rates are. It's a bad environment for banks.
And they are definitely an important read on the economy, because if businesses are doing well, they could be borrowing money.
It's a levered play on the economy.
Yes, and so it is something we watch closely, so it's kind of a scary chart to look at.